Hey, good afternoon, traders. Today I want to talk about the four biggest reasons, in my opinion, for this Bitcoin pullback. All right, guys, welcome. So today I'm going to do something a little bit different. I'm going to be talking not just about technical reasons for this Bitcoin pullback, but also a few fundamental reasons that play into support for our technical thesis. As you guys know, I've called for a 48K top all along. And in fact, for the first time ever, I threw 100% of my portfolio at Bitcoin at just over 40,000, taking 50% profit at 47,000, and then the remainder of the 50% at 48,000 exactly. That was my target. And once we reached that, I took my profits happily and left. All right, of course, all along I left room for the possibility that we could wick up to that 52,000 mark and even as high as 55,000. It was all unknown what would happen once these ETFs started trading. So I left room for that possibility, but I knew 48K was going to be huge resistance and that we most likely would not just break straight through. All right, so I remained disciplined in exercising my strategy to exit at exactly 48,000, and that is what I did. Now, as you guys know, this channel relies heavily on technical analysis. In fact, that is almost exclusively what I do. So I first look at the technicals, and if we do it right, the technicals will tell us the news before it happens. So I saw that 48K resistance. I knew it was going to be huge, and I knew the probability of a pullback at that level remained highest. But now that the pullback has occurred, I want to take a look at a few of the fundamental reasons associated with this pullback as well. So now that the pullback has occurred and the technical analysis that I did stands correct, we can investigate into some of the fundamental reasons why it has pulled back and combining this fundamental analysis along with the technical will help us better understand the way that Bitcoin will trade into the future. Of course, we will rely mainly on technical analysis, but always with fundamental artifacts and analysis in the back of our minds to help guide us as we do this technical analysis. All right, so let's get started. Four biggest reasons for this pullback. Number one here, of course, is the 48,000, which I have already mentioned in the introduction. Don't really need to go into this in any more detail. I will dive into the charts at the end of this video, and we'll take a look at the Bitcoin chart and talk about technical side a little bit more, but we'll just be short on that point. 48K, we hit it, and we are pulling back as anticipated. Okay, the remaining three have to do with the fundamental side of things and why we can see that this pullback occurred. Number two here, inflation came in hotter than anticipated. All right, so you can see here the consumer price index increased 0.3% for the month, higher than the 2.2% estimate at the time when most economists and policymakers see inflationary pressures easing. And then on a 12-month basis, the CPI closed 2023 up 3.4%. Economists surveyed by the Dow Jones had been looking for a year-over-year reading of 3.2%. Okay, so let's talk about how this plays into the psychology of the average trader. Jay Powell had just gotten done telling us that rates remain paused, and there was hints of potentially 3 rate cuts this year, 2024. At that time, it was the next year. All right, so that was provided that inflation continued coming down. And of course, the target remains somewhere around 2%. That's what the Fed is shooting for. And now with this little uptick in inflation and rates have not been decreased at all, they still remain paused. The profit from October to just recently, but they also gained that 10% in discount as GBTC converted over to an ETF. So out of the 4.6 billion that was traded upon launch, I believe GBTC accounted for nearly 2.8 billion of that. What do you think was happening with that volume that was being traded via GBTC? I'll tell you what was happening. Sellers came in to take their profits. Now they've netted the 10% discount and all of the profit from October. And so sellers came in. And there's one more thing about GBTC. The fee for trading is 1.5%. It is higher than any other ETF out there. So traders are going to take their profits, and maybe they sit on the sideline. Maybe half of them sit on the sideline. Maybe more than half of them sit on the sideline. In any case, once they take their profit, they're probably not going to go back into GBTC. They're going to go to one of these other ETFs that offer, some of them are offering 0% for some time, 0% fees, entry. So they're taking their money, and they're probably most likely going to sit on the sidelines for a while, especially with this inflation news. And they're probably also considering my next point here. And my next point is this. Upon BTC ETF approval, traders were able to breathe a sigh of relief, knowing now we have 10, 11, whatever it was, ETFs approved. And traders can now anticipate an Ethereum ETF as more likely. So another fundamental reason why Bitcoin may have pulled back, in addition to higher than expected inflation numbers and GBTC traders taking their profit and sitting on the sidelines, is many traders now were looking for this ETF approval so that they could move their money, sell the news, move their money to a new risk venture, which is Ethereum. So what happened with Ethereum? We'll look at the charts to analyze this a little bit, but as soon as Bitcoin was approved and people sold that news, you saw Ethereum spike. What was happening? Traders could now more assuredly make a bet that Ethereum is going to have a future ETF, a future spot ETF. And that is where the bet that's where money is currently being placed in this bet. All right, guys, so that was short and sweet and to the point. I'm not going to go into the nitty gritty of each one of these things. My specialty, of course, is the first one, which is the technical analysis side of things. But now that we've seen this pullback, I think those last three are worthy of consideration. And the question remains, how long will this pullback last? So to answer this question, you really have to know, how many of those traders from GBTC are sitting on the sidelines. How many of them are going to reinvest into a cheaper ETF, an ETF with less expensive fees? How many BTC traders have now moved their money to the Ethereum bet, the Ethereum ETF bet? And what is the process of inflation going to be during the next coming months? Is it going to continue trending up? If so, that's serious as well. So those are the kind of things that you have to think about from the fundamental side. From the technical side, we can kind of see some of those answers. So let's just jump into the charts. 1 second. All right, so here's my Bitcoin chart, and it's still pretty dirty. I did not clean it up, but let me just zoom out again, and we'll reiterate why this 48,000 is key resistance. You can see as far back as let's see here, April, key pivot. All right, then you had a key pivot here in September of 21. Okay, this was April of 21. And then before that, it provided serious resistance after this key pivot here in September of 21. It provided key support, breaking through. You can see we dropped seriously, came back up here in March of 2022, and again proved itself to be key resistance. After that, it was just sell, sell, sell. Tremendous sell pressure as many different events took place. The lunar crash, the FTX fiasco, SEC suing altcoins. All of this played into this bear market. A lot of manipulation, if you ask me. All right. So then anyways, I knew coming up to this 48,000 that there's going to be serious resistance. And even with the ETF launch, remember, most people had bought into this bull run prior to the ETF approval, knowing that it was going to be a likely scenario. So it became, as I kind of anticipated, a sell the news event, and it became a sell the news event where right at that 48,000 resistance level. Now remember though, the charts were telling us that this was going to be, buying was getting weaker and weaker. It was telling us here on the price chart when we broke below this red ascending line. See this line? It began here in October, and it goes all the way up to 48,000. All right, but we broke down through this line somewhere here. Let me just put my line over the date. End of December, just before Christmas, it looks like. All right. So once we broke that line, I knew price was getting weak, but we had more clues. And remember, I said the RSI is our leading indicator. So here on the RSI chart, here's our ascending red line. This is what we were watching, and this is what precedes the price movement above. All right, so we broke below this RSI line in November, a month before that break on the price line above here on our price chart. Down here on the RSI, we broke this level of support. So I knew that weakness was starting to show. And now I have been pointing out on the altcoins, the same thing is occurring. We're breaking support on our RSI, and that precedes price movement above on the price charts. All right. So if I zoom out again on this chart, I'm going to show you what I have been proposing might occur. We formed this big old cup from the 48,000 price level down through our lows, and then up here to our most recent highs at 48,000 again. All right, that's a big old cup. I called for a pullback, and I said this pullback may make a beautiful handle pattern. So that gives us a big old cup and handle. And if we measure that out, it's not going to be as optimistic as some of you bulls are hoping for. But I get a price of 80,000. That's still twice where we're at currently. I know people are calling for 200,000, 500,000, and just, ridiculous numbers on Bitcoin. I don't know whether that's going to be true or not. I can tell you what the technicals are showing me is a price of 80,000 probably by end of this year, 2024. Okay, so let me just zoom in once again on this chart, and we'll just replay what had occurred here. We got the ETF news, spiked up. I said we could go as high as 50, 52,000. We didn't even get that. So that was telling me that the bulls were exhausted because that this just was just really weak. And then the selling ensued. Now, what happened on the Ethereum chart during the same time frame? All right, so we can see here that up to the ETF approval news, we spiked. All right, now I circled this because this is also serious resistance. It was a one-day gain here from the bottom of that candle to the top at resistance of about 13%, 13-14%. All right. And let me get this out of the way. Delete that. And I knew we were running into serious resistance, just like I see on the Bitcoin chart. Where does this resistance come from, and how did I know that was going to be a point of resistance? Just like I tracked it on the Bitcoin chart, you can see here when we broke this head and shoulders pattern, which I had drawn out here, that was the same intersection here. That is our trend line runs right through that, but it also hits this pivot. It's hard to see here unless I zoom in, which I'm not going to do because that's going to take me out of auto mode. Let me just get a big arrow here and see if I can point to a serious pivot right here. All right, and that date was somewhere in September of 2021. All right, and then we had more pivots over here and over here. This is a major trend line, and it's confirmed by a break here at the neckline. And see how far we fell? That tells us how significant the market treats those particular trend lines. So coming up to this in present time, I knew also that was going to be serious resistance. Additionally, guys, I want you to look down on the RSI because we're seeing this on all the charts. See this descending red line here? That is bearish divergence. All while the price is increasing here on the Ethereum chart from way over here in October. We just traced and followed this support all the way up, broke it here. But down here on the RSI chart, look what's happening. This is reflecting bearish divergence. So we broke up on the day that, or just preceding the day that the Bitcoin ETF was announced, and I knew we'd come back up to this previous support, which, by the way, guys, was also broken a month before price broke this red ascending trend line up here. Again, same thing is happening on our altcoins. All right, so that's what I want you to be aware of. I want you to be watching that support because it is breaking. Now, it hasn't broken on all the altcoins, but it's broken by, on my list, at least 50% of them, over 50%, probably 60% of them, maybe 70% now, I haven't looked recently, have broken that support on the RSI chart. And again, that is our lead indicator. That tells us give it another 3 weeks, 4 weeks, the price will also break its support up here. All right, so now Ethereum has hit its resistance and is coming back down. I expect that this line will no longer hold. It broke once here and we came back up because everybody moved their money over to make the ETF bet on Ethereum. But now it is becoming a sell the news event on Bitcoin, which is our lead dog, and that will tend to drag the market down. We have to watch what the dollar does. We have to watch how the market reacts to these inflation numbers. We have to see what the market makers are up to. I know there's some big wallets that are moving coin over to Coinbase. By coin, I mean Bitcoin, over to Coinbase wallets. And those big wallets are owned by Grayscale. Why would Grayscale be selling their coin to Coinbase? One thing I can think of is Coinbase needs liquidity to keep these funds. All right, so they will pay a premium way far and above market price from private wallets, possibly BlackRock made an under the table deal with them. We don't know, but I think it was about $180 million worth of Bitcoin has been moved from BlackRock owned Bitcoin wallets over to Coinbase now, providing liquidity for Coinbase, but who knows what kind of premium Coinbase paid for that $180 million worth of Bitcoin. Maybe they paid $300 million worth for it. All right, so those are things we have to think about. Just providing liquidity doesn't mean the price is going to go up. Could also go down, could go the other way, especially if BlackRock is unloading. We have to watch what big money does. All right, guys, so I've kind of been trying to warn you about what happens when big money gets into the market. It doesn't just, like I've said many times, it's not like everyone just gets rich. That's not the way it's going to work. If anything, there's going to be more of a sell event here than people anticipated as they continue to shake out the pockets of weak hands and mostly retailers. All right, the buyers who bought at the top, generally we refer to this as dumb money, and now they'll start to get scared because they bought at 46,000, 45,000, 47,000. They did not sell at 48,000 like I did. Instead, they're holding on, and they're thinking of themselves as hodlers, but wait till the price gets to around 36,000, or maybe it drops down to 31,000. The market makers have more power to drop the price than I even understand. And so I just want you to be aware of the way that these guys work. Everybody doesn't just get rich overnight. So unless you hodl onto that through the year, you're going to be out of money. You're going to sell once fear comes back into the market. There'll be lots of FUD. Maybe there'll be another war. Maybe Biden will get his wish and we'll get start World War III with a nuclear bomb. And who knows? But that's going to scare the market to death. All right. And weak hands are going to release their coin. That's just the way it works. And that's what I want you to be aware of. You can't be a profitable trader unless you know how these guys work. All right, so until the next video, guys, hopefully that was helpful. Peace, y'all.